Let's start with the stock market action. Positive global cues and a late rally in financial stocks helped boost sentiment. Sensex gained nearly 500 points and the Nifty gained over 100 points. Nifty Bank Index gained nearly 2%. To the currency market, rupee shook off early weakness to end flat in what was a cautious start to the week. The RBI was reported to have intervened last week to avert more depreciation. As things stand, $1 is worth more than 82 rupees. Jeremy Hunt, the new British finance minister, has scrapped almost all the planned tax cuts announced in the Truss government's mini-budget last month. The move is to appease the markets, which went into a turmoil after Hunt's predecessor, Kwasi Kwarteng, announced unfunded tax cuts. He was fired earlier this month after facing severe backlash for his announcement. Sanjay Suri gets us more.
Following on from the two dramatic U-turns we saw earlier on Liz Truss's policy announcements in government and through her campaign, new Chancellor Jeremy Hunt has gone yet further to U-turn now on just about every significant policy decision announced in that now discredited mini-budget of September the 23rd. In a third major U-turn, now the Chancellor says the basic income tax rate will not change. It will stay at 20%. And not 19% as proposed in that mini-budget. That mini-budget had announced the dropping of the top rate from 45% to 40%, but that was reversed soon after. The next reversal, the next U-turn came over corporation tax. Liz Truss announced that she will restore Rishi Sunak's plans to raise corporation tax from 19% to 25%, and now we are back to the 20% basic rate. And there are more reversals we see now, U-turns right across the board over a VAT-free shopping for visitors as proposed earlier. That goes over a freeze on alcohol duty rates, the cuts to dividend tax rates, and that other giveaway by way of government support with energy bills, not quite abandoned entirely, but Hunt has said it will be reviewed. Quite suddenly, it now seems Liz Truss and her government certainly thinks the absolute opposite of what it had thought and decided to do just 3 weeks back. By early indications, these U-turns appear to have calmed the markets for the moment. The government's cost of borrowing is down a little, though still not back to the pre-mini-budget levels. These U-turns, of course, were rushed in order to calm the markets, but it's not certain that they will continue to deliver as intended. Certainly, Truss's credibility has crashed, and more MPs from her party are now demanding that she must go.
The other big international story, a case for military modernization and expansion, doubling down on the stringent zero-COVID policy and a call for the rejuvenation of the Chinese nation. President Xi Jinping's 2-hour-long speech on the opening day of the China Communist Party Congress cast himself as a sole power center ahead of an unprecedented third term and cemented his position as the nation's most powerful leader since Mao Zedong. President Xi took a dig at the US, said there was foreign interference in Taiwan, and justified the security law that effectively criminalized dissent in Hong Kong. President Xi also vowed to speed up efforts to build the PLA into a world-class military.
Resolving the Taiwan question is the matter for the Chinese, a matter that must be resolved by us. We will continue to strive for a peaceful reunification with the greatest sincerity and the utmost effort. But we will never promise to renounce the use of force, and we reserve the option of taking all necessary measures.
United States has imposed export controls to restrict China's ability to make high-end semiconductors. These restrictions by US Department of Commerce are aimed at Chinese manufacturing of advanced computing chips, supercomputers, and advanced semiconductors as well. The Biden administration has said China is using high-end chips for military systems and AI for surveillance on the United States. And therefore, these export controls are a national security interest. Now, these changes have far-reaching consequences. Basically, ban on export of all semiconductors made with any US equipment or by a US citizen to China. This ban applies to all nations and companies using United States equipment. Non-compliance will restrict a company's access to US technology, and those not cooperating will be put in the entity list. or subject to sanctions requirement. Most recently, YMTC, a Chinese maker of memory chips, was added to the entity list. A total of 30 companies, including Chinese supercomputer companies, were added to the entity list. Now, as a consequence, Apple has put on hold plans to use memory chips from Chinese YMTC. Remember, Apple wanted to use YMTC chips as they are 20% cheaper than other players in the market. ASML, a Netherlands-based company, has asked its United States employees to stop servicing and shipping to Chinese customers. Taiwan Semiconductor Manufacturing and Samsung have also been restricted from exporting chips to Chinese companies. Now, even US citizens, they cannot work in Chinese semiconductor industry, or they may risk losing their citizenship. Chinese semiconductor industry has reacted rather sharply, calling these restrictions arbitrary, and that the controls will also put more stress on the global supply chain of semiconductors. The Industry Association there in China has urged the US government to reverse the wrongdoings. The Indian industry, we've been speaking to many players here, and the Indian industry feels these US export controls have a sweeping impact, and the import of electronic sub-assemblies and modules from China will run into trouble in the short run. There could be supply chain disruptions related to RAM modules, components of modems, mobile phones and laptops. All of this could be impacted. In the long run, though, there is a belief here in India that US export controls could help India with companies looking for alternative manufacturing destinations to China.
Now what the United States has done is not only to limit the export of semiconductors themselves, but also to prevent them from getting the software and the tools to develop and design semiconductors, as well as the machinery to manufacture them. In a sense, this is like strangling or choking the entire semiconductor chain. Now, of course, in the short term, this will cause a considerable amount of difficulty to Chinese. But the Chinese have, over the past few years, through government funds, invested in the semiconductor business, both in design and in manufacturing.
And we discuss President Xi's power consolidation and his blueprint for China at 10 p.m. with former Foreign Secretary Vijay Gokhale. The big newsmaker tonight, Air India's new CEO and MD Campbell Wilson is charting a new flight path for revival and says Tatas are committed to making it the best airline in the world. Speaking to Shereen Bhan in his first TV interview, Wilson said that the turnaround process is not a T20 but a test match which needs patience, ambition and luck. When asked about the progress so far, Wilson said Air India's punctuality has increased, with on-time performance jumping from the 6th spot in April to the 1st spot in September. He also talked about the plan to triple Air India's fleet and gain 30% market share in 5 years. Speaking about the negotiations with Singapore Airlines for a possible integration with Vistara, Wilson said the talks are at an exploratory stage and Air India's revival is not contingent on the potential integration.
Well, there's a lot we can do. Many contracts have been renegotiated. We have aircraft that previously were being paid for but not able to fly, putting them progressively back into service. New systems and tools, revenue management systems, distribution capabilities. As we get more punctual and therefore more reliable, we can charge people a fare that is commensurate with the product quality they're getting. But there's many other things we need to do. Seats, in-flight entertainment, all of these things we're investing in to take that product a little bit further. But yes, it is still a challenged business, and the high fuel prices at the moment are not helping any airline, including Air India. But we're confident that there is a path to success. We're confident the path to success is not forever. And so, yes, I think we're quietly optimistic that we can turn this business around in a pretty good time.
What kind of capital infusion is required at this point in time for you to be able to achieve the kind of targets that you've set out for Air India?
Well, we're not talking specifically numbers at the moment. We're talking about ambitions. We've publicly stated that we want to increase the fleet by about 3 times. We want to invest in products and systems and services that the customer experiences, but also that the employees need in order to provide the service we want to provide. It's going to require significant investment in aircraft, but not just aircraft. Really, so it's more about ambition rather than dollars at the moment. provided that we execute well and we are delivering the value and meeting the aspirations of our shareholder, I'm quite confident the capital will come.
But what would the ballpark number be, given the fleet expansion aspirations that you have, as well as everything else that you want to fix on the back end? And where is the capital going to come in from? Are you looking for capital outside of the promoters?
Well, again, I'm not going to put a number to the capital. I think you can do some back-of-the-envelope calculations. If you triple the fleet and multiply that by aircraft prices, you get a sense.
It would depend on who you're talking to and how hard of a bargain you're going to negotiate.
And trust me, we're negotiating a very hard bargain. But it's big numbers. But it's big numbers in the context of rebuilding an airline, a world-class airline, an airline with a global reach that represents and takes India to the world. So the numbers are big, but the ambition is big, and I think we've got the backing and the support to do it. With respect to how long it takes, look, it's going to take a while. This is going to be it's not a T20, this is a test match. And in a test match, you have different milestones. In the way to 100, you need to be patient, you need to be ambitious, you need to be sometimes a little bit lucky. Sometimes you'll score sixes, but mostly it's about graft application, patience, and scoring those ones and twos consistently over time to reach the objective.
And you can catch excerpts of this exclusive conversation at 9:30 p.m. right here on CNBC-TV18. In key earnings, cement major ACC missed estimates and reported a loss of 87 crore in the third quarter, a 67% rise in power and fuel expenses, and a 32% rise in input costs took the company in the red, with margins shrinking to just 0.4%. ACC also reported a 6% rise in revenue, which was in line with expectations. After staying indoors for more than 2 years, people are going back to cinema halls, and it's visible in multiplex chain operator PVR's Q2 earnings. The company's net loss shrunk by 53% to a little over 70 crore rupees. This was helped by a whopping 470% jump in revenues. Margins also held firm at 22.4% over the quarter. Invesco, the largest shareholder in Zee Entertainment, will sell 5.5% stake in the company via block deals tomorrow. OFI Global China Fund, which is managed by Invesco, will sell the shares at a price range of 250 to nearly 264 rupees per share. The sale is likely to mop up around $170 million. Invesco was the largest shareholder in Zee, with about 18% stake before it was embroiled in a tussle with Zee promoters. Invesco eventually agreed to a merger with Sony, which has received the Competition Commission's approval with a few modifications. Reliance Jio and Ericsson entered into a long-term strategic agreement to build 5G standalone infrastructure. This marks the first such tie-up between the two companies for radio access network deployment. Nokia secures a multi-year contract with Jio to supply radio access network equipment. Ashwit Kumar joins us with more.
Well, Reliance Jio, which is one of the largest radio access network footprints in the world, today made a strategic step forward as far as its 5G rollout is concerned. This step is essentially a tie-up with some of the key telecom equipment vendors, which will be critical going forward for the 5G rollout. In terms of what these tie-ups are, well, let's take a look at the first one, which is with Ericsson. This is the first such tie-up between the two companies. Ericsson is calling it a long-term strategic agreement between the two sides. Under this long-term agreement, Ericsson will be deploying 5G RAN products, radio system solutions, as well as E-band microwave mobile transport solutions. This will essentially add more strength to the standalone network, 5G standalone network that Jio is seeking to deploy. That's only part one of the story. The other, of course, is again the long-term, the multi-year contract that Nokia has bagged. This one, again, with respect to radio access network, a number of these products in the Nokia portfolio will be made available to Jio. What are some of these products? Well, RAN products like base stations, high-capacity 5G massive antennas, and remote radio heads. These are some of the products that will be made available. Again, let's not forget that Jio has one of the largest RAN network footprints and therefore is seeking to benefit by engaging with these stakeholders, vendors such as Nokia as well as Ericsson.
All right. Welcome back. You're watching India Business Hour. EdTech unicorn Byju's has raised $250 million in a fresh funding round with participation from existing investors, including Qatar Investment Authority. Arundhati Ramnan is here with the details.
Absolutely. Byju's has backed $250 million with participation from existing investors, including Qatar Investment Authority. Byju's, which counts Sequoia Capital, Tiger Global, Tencent, Naspers, General Atlantic and Lightspeed as its investors, hasn't disclosed the complete list of backers in the new funding round. Last valued at $22 billion, what also remains unknown is the valuation given to Byju's in this round, although a source told Money Control that the funds were raised at the current valuation. Now, the fresh capital infusion comes soon after the company announced plans to lay off 2,500 employees across teams while enlisting a slew of optimization measures to hit profitability by March 2023. For FY21, Byju's losses widened by nearly 20 times to 4,559 crore rupees, the worst bottom line figure among all of India's unicorns or startups valued at $1 billion or more. Now, the startup's founder and CEO Byju Ravindran said in a statement, and I quote, "Regardless of the adverse macroeconomic conditions, 2022 to 2023 is set to be our best year in terms of revenue, growth and profitability." At the time of releasing its FY21 results, which was delayed by at least 18 months as Byju's adopted a new revenue recognition mechanism, the company had said that it clocked 10,000 crore rupees in revenue for FY22 unaudited. That's a 4x jump over FY21. Now, while the top-line guidance is strong, all eyes will be on the bottom line after record losses in FY21. With that, it's back to you.
Thanks so much, Arundhati, for joining us. Now, as India navigates through an unpredictable global environment and fears of recession, Indian CEOs are quite hopeful that India's growth trajectory will largely remain unharmed. Shereen Bhan was in conversation with 13 leading CEOs from various business arenas, and all of them were nothing but optimistic. Nikesh Arora, Chairman and CEO of Palo Alto Networks, Nirmal Jain, Founder and Chairman of IIFL, and Dheeraj Relly, MD and CEO of HDFC Securities, believe that Indian companies are well positioned to weather any storm.
One thing that has stood the test of time, you build a strong, robust business, you can weather any storm that comes your way. You could be unlucky that you're building a robust business and there is no capital in the market to be had. Still believe there are phenomenal sectors in the Indian economy which are well served with technology and automation than with purely the labor force that we've always had in this country. So I think all those things are in the right direction. It just means that any entrepreneur who was looking for a quick exit at a lofty valuation is going to go back and have to work hard for the next 10 years. The sellers still have indigestion. I don't think the sellers have quite realized that the world is now different and they're not going to see those valuations for a long time. I think the entrepreneurs who raised money at a high valuation still haven't run out of money. I still believe they have a bunch of money in the bank. So I think entrepreneurs aren't ready to sell at a lower valuation yet. A recession might be here in certain industries, certain sectors. I think if the central banks persist, they will make it a self-fulfilling prophecy, causing some sort of recession. I think it's too early to predict whether we get a hard landing or a soft landing. I do believe if inflation gets out of hand, if interest rates keep going up, the dollar will get stronger, which might have a marginal impact towards what happens in India as well, because we're still reliant on dollar imports. That might have a marginal impact, but it really depends on how well the Indian consumer holds up.
While the market is always like a pendulum, it can swing on optimism a little bit on one side too much. But if you have a long-term approach, then I think Indian equities will do well because the fundamentals are strong. The short term will remain volatile. But India has unique opportunity to maintain the growth, with the impact of, say, currency or inflation may be moderated down from 8 to 7. But it still stands out in this world where no other country is growing, even China will find it difficult to maintain 4% growth.
I think the inflation to some extent is real. It's a threat. It's already known. Recession, maybe, in the developed world, we may see a recession, hard landing, soft landing, you've already covered. My take is that India is a land of opportunity. And we have a very stable government. The policies are favorable. Demographics have been favorable for a very long. We've been talking about it, not being able to unleash the same. I think the young Indians, the startup community, everyone is looking forward to unleash themselves. From that point of view, it's just that we need to execute, implement well.
All right, with that, it's a wrap on this edition of India Business Hour. Thank you for watching. News continues right here on CNBC-TV18.